And welcome to this session on student finance for the academic year of 2021 and 2022. It's an absolute pleasure to be invited by Link Hire to develop and talk to you about student finance for the next academic year. My name is Amar and I work for the Student Loans Company and I'm part of the Funding Information Services team. You'll note on the holding slide there's a little note at the very bottom that says all information is subject to final policy approval. That's because we are going to be talking about 2021 and 2022. And although a lot of the content is absolutely fine, it rolls over from the previous academic year until what we call the regulations have been laid by Parliament, which we're hoping takes place in December. Everything needs to have that caveat. So one of the areas that I like to always start off with is basically around eligibility. And the key areas of eligibility often relate to residency. So first and foremost, just as a refresher and a reminder to everybody that students need to meet certain residency criteria in order to be able to apply for and be eligible for student financing and support. Now, I'm not going to labor the first three bullet points because I'm sure in your experience and your day-to-day activities of supporting your learners progress to higher education, you'll be familiar with some of the things around settled status and being ordinarily resident in the UK and in England for the 3 years before. Because unless you haven't heard or you've been living elsewhere, we are in the process of Brexit and changes from 2021-22 rules for the EU citizens and European Economic Area nationals to study in the UK are going to change. The transition period ends on the 31st of December this year, and I'll talk a little bit more about that as we work through the slides. Another area that I want to highlight today is that students may be eligible to apply for support if they have a residency status such as refugee, stateless, humanitarian protection. But what I've done is I've included some links here for you. So rather than going away and researching, when you get access to this presentation, which you will do after today's session, if you click onto these hyperlinks, it takes you directly to the government information around both for EU and EEA nationals and how it will affect them, and also who can qualify to receive student finance support from next year. So a little bit about, obviously, the new policy for 2021. We are still awaiting for this to be confirmed, hence why it says EU nationals all to be confirmed. The government hasn't signed off the final Brexit policy element for student finance. We've been pushing that along pretty much every week and every month. Our policy team are working with the DfE directly on a daily basis, and we're fairly certain that by the end of December, if not early January, we should get the go-ahead to release that to the public. But generally speaking, we've been receiving a lot of queries from schools, colleges, and from universities around what does the whole EU change mean in 2021 and 2022. And a lot of people have tried to interpret a lot of the ministerial statements, and in particular, Michelle Donnellan's statement back in June. My advice to any teachers and advisors supporting students who are of that category, the EU and EEA nationals, is that don't interpret the policy. Don't interpret the ministerial statement. Have a read. There is a link at the very bottom there again for you. Really, what you have to remember is this relates to anybody that wishes to remain in the UK must have gone through the EU settlement scheme by July 2021. But in order to do that, they have to be resident in the UK before the 31st of December 2020, which I'm sure they are if they're within your school or college. Once they go through the EU settlement scheme, they'll be given one of two status. Firstly, settled status, which will be classed as indefinite leave to remain, or they'll be given pre-settled status, which is limited leave to remain. Settled status can only really be given if the EU and EEA nationals have been living here in the UK for 5 years or more. Where it's pre-settled status is generally where they've been here less than 5 years. So if they've got settled status, they will get indefinite leave to remain and would qualify and be eligible for full student finance England support when progressing on to university. If they get a pre-settled status Home Office documentation, then they aren't entitled to full student finance England support. They would be entitled to the tuition fee only. But depending on the number of years that they have been in the UK, if during their higher education studies they reach the 5-year period, they can then apply to get their citizen rights and their settled status directly from the Home Office. And that's the most simplest way to look at it. that we are looking at two status, settled or pre-settled. Based on what students receive determines what they will be eligible for Student Finance England next year. So students that arrive in the UK after the 31st of December deadline will actually be subject to overseas fees by institutions and effectively be classed as international students and will have to arrive in the UK based on the new point system immigration. We as an organisation, the Student Loans Company, are continuously working with the Department for Education to look at the process, the evidence requirements, and some of the cases that involve obviously family members and family members joining existing relatives that are currently in the UK. So there will be more information and more promotion and more IAG around this coming out in the next few weeks and months. But as I said at the beginning, there is a link there for you to have a look at. So please do read that, understand what the settled status and pre-settled status means for your current students if you are starting to receive some of these questions. Now, outside of the EU and EEA, we also have what's known as the rest of the world nationals. And that's a category, again, it's all subject to confirmation from government based on this new policy. But there are some new residency categories, and rather than text heavy, put it down for you, I've put it as a table to simplify it for you. So where somebody gets indefinite leave to enter or remain, rest of the world's nationals have to identify 3 years ordinary residence in the UK. They'll be entitled to full support. Refugee status, indefinite leave to remain under domestic violence, which was a new category introduced in 2020, and indefinite leave to remain as a bereaved partner. 3 years rule has actually been removed for that category. Equally, for humanitarian protection, stateless persons, Section 67 and Calais leave, again, we have replaced the previous 3 years UK rule as long as they have maintained UK residency since that status was awarded. So they have to have maintained a UK residency, been living here lawfully once that status has been awarded, and they are entitled to the full Student Finance England support. The long residency eligibility criteria has been there since late 2016, early 2017. And effectively, for under 18s, they have to identify 7 years of UK residency. If they're over 18, half their life, or at least 20 years in the UK, to include at least 3 years lawful residency. And if they can do that, they again are entitled to full Student Finance England support. The key thing here is to look at the far right column, support available. You'll notice it says full Student Finance England support all the way through. And that is if they meet the first and second column. So that would be for the rest of the world nationals, those that arrive under asylum seeking, receive refugee status, or get indefinite leave to remain or enter, or if they are under one of the other categories in the new residency category column that I've already spoken about. So please use that as an illustration, use it as a reference if you do start to receive questions around that particular category. So some of the more bread and butter information around student finance for 21 and 22. It's a new year, so the new figures are out. The figures were released earlier in the year, so I won't verbatim each information slot that is there on the slide, but you'll see the three rates exist. They go up. The amount of maintenance loan increases every year in line with inflation, and that has happened again. So the parental home rate, the elsewhere rate, and the London rate have all gone up from previous years, and that would apply to any existing 2016 students that are at university, but any new students considering progressing on to university or higher education as well. Again, for illustration purposes and for your own reference, I've included a table here. The first column identifies where somebody might be studying, maximum amount available or up to the maximum amount, and then how the non-income assessed element and the income assessed element is then worked out to be able to identify what somebody would be eligible for. You'll notice from this table, I've identified the very top row as green, and that is simply because where the household income is under £25,000, any student that comes under that category is entitled to the full maintenance loan. There isn't a non-income assessed amount and then an income assessed amount. Then where the taper increases to 35, 45, and 55 and above, you'll see the home, elsewhere, and London rate change based on what somebody's actual household income is. And once those rates have been confirmed and the regulations have been laid in Parliament by government, the student finance calculator is available. And so we strongly suggest that where you are supporting students to identify what they might be entitled to and the discussions that they will have with parents. It's worthwhile going onto the Gov site, having a look at the student finance calculator and starting to work out roughly what it is that they might or may not be entitled to next year when they do start university. We'll talk a little bit further about sources of extra help for support for students. Now, where there is extra support available, we really want students to research this as part of their whole higher education transition period. So there's extra financial support for people that have a disability, a specific learning difficulty, long-term health condition, or a mental health condition. And that normally comes under the Disability Support Allowance. Now, for 2021-2022, the next academic year, the DSA will be undergoing some changes. Whereas up until now, there have been 4 elements based on a needs assessment report, which identifies what somebody could be able to draw down support for. All students from next year will have access to a single fund of up to £25,000 per year whilst they're in higher education. Now, that isn't £25,000 that they are given. It's a fund of up to £25,000 per year to identify based on their needs assessment report and the support that we identify for them from our Disability Support Allowance team as to what they wish to be able to spend that DSA support on, rather than previously where it was prescriptive of the 4 elements that they could spend it on. There is continued work around the IAG on this, and there will be further promotional material coming out over the next few weeks and months in time for when the application window is launched between February and May. Again, where students may have children or other adult dependents, there is extra support there in the form of childcare grant, parent learning allowance, and the adult dependent grant. And it's important here for students to fully understand that anything that has the word grant attached to it, it is not repayable. It's not a loan. And if they qualify for it, then they should be made aware of how they may be eligible for it. We know that the NHS has been pretty much in the limelight and spotlight for the government over the last few months. They introduced the training grant of up to £5,000 for those students wishing to study nursing and midwifery from 2020, and that continues forward in 2021 and 2022. So again, I've highlighted that with a hyperlink. That money is administered directly from the NHS, not from Student Loans Company. So the link there does take you directly to the NHS Business Services Authority Student Services site, and you'll be able to draw down a lot more information about the additional support that's available from the NHS, in addition to the Student Loans Company, maintenance loans, and tuition fee loan that is available directly from us. But one area where students repeatedly every year, I find, fail to do a lot of research on and ask the relevant questions is where there are bursaries and scholarships available. So the UCAS season has started. Students will be completing their UCAS application forms and making decisions about which universities they're thinking about studying at. Part of those conversations with those universities and higher education colleges should involve what bursary and scholarship support is available. And that would include for things like students that achieve high academic results, the kind of course that they're looking to study, or if it's a low household income, as I suggested earlier on, of below £25,000. It could also be that they are the first in their family to progress to higher education. And for that reason, a lot of institutions do offer further support in the way of discounts on tuition fees, cash bursaries, or even scholarships based on a whole host of variables available to them from their own institution. So please, one of the things I would encourage and urge students to do is when they are doing their research, thinking about which university or college that they wish to study at, is definitely speak to these institutions and the representatives from these institutions to ask about scholarships and bursary support that's available directly to them. This brings me on to the actual application process. And for this, I really do want to emphasize one key point. Each year, unfortunately, students tend to make late applications. The application cycle opens late January, possibly early February, and there is a prescriptive deadline of May. Now, that is yet to be announced by the government for 2021, but generally speaking, it is always late January, early February. So what I would encourage, any work that you are doing, whether it's through Link Hire, directly through other institutions, or you yourself in your school or college are responsible for supporting students with student finance and UCAS, is to constantly remind them to make an on-time application form and the right application form. The quickest and easiest way to do this is always the gov.uk/student finance online application. And the key thing here is that students often think that they need to wait for their UCAS offers to come in before they make their student finance application form. It's simply not the case, because the number of students that wait to receive their confirmation or their insurance offers, and it could go into April, May, and it's sometimes even June. If it goes into June, they are then making a late application for student finance. We don't need to know a confirmed place of the institution name. What we do ask for is for the student to put down their preferred choice on the student finance application form. And if they then choose to change that institution and not study there in September or October, they can go online and change the name of the institution that they do wish to study at. It's as simple as that. But making the application form early between February and May ensures that any maintenance loan that they're entitled to, that payment reaches them when they actually start university. Unfortunately, there are too many cases every year where students experience hardship. They start university late September, October. They made a late application. They waited until possibly their A-level results day in August or their BTEC results to come out. And then unfortunately, they are facing hardship, and that puts an extra burden on the institutions that they're studying at. Any evidence that they need to send to us, please make sure that they do it right first time, both for them and their parents, whoever may be supporting their financial application form. Not only that, they need to read, understand, and agree to the terms and conditions of the student loan that they're taking out. And it is all done electronically now online. It's a digital signature, so they don't have to print the application form, sign it, and post it off to us. Before starting their application forms, another gentle reminder for them is to ensure that they have all of the documentations that they need for us to validate their identity. So things like their passport. If they don't have the passport, we will request the original birth certificate, which they will need to send in to us. An idea of their university and the course details. Again, as I said before, this can be changed at any time. They must have their own UK bank account details. Again, amazingly, the number of students that don't have their UK bank account at the time that they start university, we cannot put a maintenance loan payment into anyone else's bank account. It must be in the name of the student taking out the student loan. And again, what we refer to as the NINO, the National Insurance Number. Any student post 16 will automatically have generated a national insurance number from the Department for Work and Pensions. If they haven't, they need to get in touch with them as soon as possible to find out where that national insurance number is. For parents or any of the sponsors supporting their application, again, the easiest way for parents and sponsors to do that is online through an electronic application. They provide us their national insurance number, household income through their P45 or P60s based on the previous tax year, and any other details of other young children in the house that they are supporting financially. It's as simple as that. We then assess the application. It can take up to 6 to 8 weeks to assess that application during busy periods. Hence why we encourage an early application as soon as possible. Just to put it into perspective, if we look at the map here, last year, the academic year that we're currently in, roughly 64% of all new full-time undergraduate applications were received by the May deadline of this 2020. And if you look at the arrows on the side there, the East Midlands outside of Scotland is the highest performing region for getting their applications in. And it's currently standing at 72%. So well done to East Midlands there. If you look at the rest of the regions, you'll see some in the red, they're below the national average, some above the national average. But again, we would love to see that at 100%, but we can't impact and influence student behavior. We know it is down to individual behavior, but the influence of that individual behavior can be supported both by the wonderful work that we see happen in schools and colleges by teachers, careers advisors, link higher organizations, and other UniConnect projects that are currently existing. So continue to reinforce the message of getting your application form done on time, right first time, to ensure that any funds that they're entitled to are ready and waiting for them when they actually do start that first week of university. That brings me nicely onto the repayment issue, the facts about student finance repayment. A lot of students and a lot of inquiries that I still receive in my region amaze me how people still listen to hearsay and not factual information around student finance. So just to simply put it, Student finance repayments work once somebody has left their course or have graduated and are working and are earning over the actual threshold required before repayment kicks in. Now, currently in the year of 2020 and 2021, that stands at just over £26,500, 2,214 a month, or roughly £511 a week. Now, repayment is 9% of any income over the threshold, not on the full salary that somebody is earning. And if you are working and earning a wage or a salary in the UK, deductions are made directly through your pay system, the tax system, and your employer is responsible for processing that directly to HMRC. We don't take the deductions, we don't take the repayments. It goes through your tax system directly to HMRC. They inform us of how much repayment you are making every month, and that goes against your balance. If your income falls below the threshold at any time, your repayments simply stop. Simple as that. And any outstanding balance is actually written off 30 years after you enter repayment. And you'll see the information point at the bottom of this slide. Thresholds are set to rise every year in line with average earnings. So next year, in April 2021 until April 2022, you'll see that the threshold is going to go up again to £27,295. So by the time you start university next year and the time you finish, if you were studying for 3 years, whatever the threshold is at the time that you finish your studies, you have to earn at least that and above it before you actually enter into repayment. And for illustration purposes, I've put a table in again here for gross annual income. And you'll see along the top row at 27,295, which is next year's threshold income. If somebody were to go straight into an employment, they're not making any repayments at that. If they were to earn £30,000, roughly payments of £20 a month, the cost of a very cheap mobile phone contract at least, or at least a Friday night pizza and a couple of drinks. So you'll see how it works. And it's remember to always keep the facts in mind. It's the facts that will allow you to fully understand how student finance works and what your responsibility for student finance actually is in managing the whole process. Interest is charged, that is correct. You'll hear a lot of talk around interest. And so for illustration purposes, I'm just putting up how interest works. So during study until you enter repayment, it's what the government classes as retail price index plus 3%. And the current retail price index is 2.6%. That is set by the government, not us. And then depending on the left-hand side, if you look at what your income is, which bands of income you fall into, it will be retail price index plus the interest that is charged depending on the income that you are actually earning. I've entered some resources here for you to have a look at. The practitioner's website is a free resource for all teachers, careers advisors, other practitioners within the sector supporting students, where you are able to get a lot of information around all of our products, how they work. My contact details can be found out from the section that says our funding information partner account manager. If you click that, you'll be able to find my details, my email and my telephone number. And again, we produce fact sheets. And again, I emphasize fact sheets of how Student Finance England works. So that, again, is useful to be able to print, send out to schools and colleges to be able for them to do what they wish. We have an interactive Quick Start Finance Guide. Again, students can have a look at this, teachers can have a look at this. It provides all of the latest information on how Student Finance England works. Key fact sheets are available. They get updated by our marketing department, so please do have a look at that. And if you wish to host that off your own home intranet page, by all means, you can do that. We've entered into a partnership with UCAS. It made sense. Everybody puts their full-time application form directly through UCAS. And so UCAS co-host us now and signpost to Student Finance England. If you don't go through our own websites, when you're on UCAS doing your application form, you will automatically be redirected to remind you, have you applied for your Student Finance England application form? And again, all of the information that I've just covered is available to you and more, especially around disability student allowance, household income, how that works, and other funding support that is available to you. Again, that just emphasizes some of the points that I've just made. And just to finally finish off, the link to the Gov website, Student Finance, but another great link is the studentroom.co.uk, co-hosted with Student Finance and representatives from the Student Room. There are live advisors there. There are some great IAG resources, all of the information and conversation that you wish to have to learn more about student finance, higher education per se. You can get that from the Student Room. That concludes the presentation and the information today. I'm now going to return to the main room, and if there are any questions, I'd be more than delighted to entertain those questions or have a general chat about student finance and your own experiences supporting students.